What kind of changes do you make during these periods of change?
You can see the change typically on the higher time frames.
What are your thoughts about this new rule?
It'd be interesting to see if enough people come in with even those smaller dollar amounts to start.
What kind of consistency generally do you see in your setup?
With my morning gap strategy, the best I ever did for that streak was about.
Or do you have a specific structure, set of rules that you are looking at before entering into the market?
I'd be getting ready, looking at what's going on in the pre-market. And what I was often doing, because I was doing a lot of the gap fill strategy, I'd be entering.
Welcome back to the Trading Map podcast, everyone. A place where we delve into trading psychology, market structure, risk management, and what it truly takes to improve as a trader over the long run. Today, I am joined by Ryan from Columbus, Ohio. Ryan has been trading equities for more than 4 years and has experienced both the highs and lows that come with building yourself in the markets. During this conversation, we get into his trading journey, the importance of discipline and routines, mistake traders commonly make, and a few practical insights that can help developing traders build a stronger process over time. If you have your iPad, trading journal, or notebook nearby, this would probably be a good time to keep it close. Let's get right into the conversation. Rand, thank you so much for jumping on. Great to connect and really taking the time for the shoot as well. I think it's a great opportunity. And why don't we just start with a bit of your quick intro? Like during our research as well, we were looking into your overall background. I mean, 4+ years into the trading and focusing on US equities and doing a bit of both, so technicals as well and macroeconomic analysis as well.
Right.
But yeah, just a quick introduction about you.
Perfect. No, and I appreciate you having me. I've been doing so. Of course, like everybody, I was aware of the market and dabbled in it a little bit for years. But along with a lot of my friends, of course, once COVID hit, everybody started taking a look at it. I
Yeah.
had 15 to 20 of my friends who were into it, and I think everybody's pretty much stopped at this point. You do it for a little while and figure out if it's for you or not. But it's something I just, I'm a very analytical person. So I just, once I started really getting to know charting and understanding kind of the nuances of it all, I was hooked. And yeah, about coming up on 5 years into it now, and I've been trading my own capital the whole time. Haven't used any prop firms. So of course, there's different psychological aspects of that whole deal. But um,
Uh,
and
Agree.
part of what I got so interested in it too is these are things that are happening around us all day, every day. Places we shop, things on the news, and being a very much an analytic, I'm like, I'm going to come in here and I'll be able to synthesize all this information and use the chart and just really, be able to figure out what other people can, like find those missed opportunities or those hidden gems that are set to explode. And it's kind of funny. Going in with that mindset, trying to devour all the news and all that, and reached a point where I'm like, I'm losing money with the complexity of what this is, but I keep watching price bounce off my support and resistance lines to the penny.
Right.
To the penny. Like,
Mm.
okay, so maybe there's something to that. So that's what I kind of talk about before we started rolling here. Is that has been the name of the game for me since I started this. Like, okay, if you know, I don't have an algorithm, I don't have a team of people researching these things. So, if this can be as complex as you want to, but the best thing I can possibly do is figure out how to find simplicity in the noise. And for me, that is, I was one of the people who I think, like most, I started off with 10 different indicators. I could barely even see the candlesticks. It's like lines everywhere, and I was just didn't know what to look at. And it's funny with trading, you start with complexity and you move towards simplicity in that naked chart and understanding structure and where liquidity sits. And so for me, I'm playing level to level. So what I talk about as well, I don't look at a ton of different names. I know I look at the Nasdaq every day. I look at the S&P, Nvidia, recently AMD. I want 4 or 5 names, and I mean, heck, I don't even need to know technically what the stock is. I can just look at the chart and tell you where I'm going to buy and sell. Then it just becomes the patience of waiting for price to get there. But I'm a very active trader. I definitely started scalping initially, and it was funny with that too. Of course, at the beginning I didn't know what the heck I was doing. I took a course or two, but didn't have a mentor. I was just in there staring at the chart, putting in my time, and of course started off on the 1 minute time frames. And what was interesting about that is I was almost afraid to look at higher time frames because I didn't want to confuse myself and have that almost like be too much information, kind of on that same frame of like keeping it simple. But as I started to do that, I really, it's funny when you go from ignorance to understanding, you realize, okay, well, since price is fractal, what I did when I was staring at that 1 minute chart was actually almost front load my understanding of structure because you're watching these patterns play out. If I was
Mhm.
looking at just daily time frames, daily candles, the same patterns that I see play out in an hour on the 1 minute time frame would take a month or two.
Mhm.
So, kind of happy accident by staring at the 1 minute chart, I really just had rapid understanding of how structure works. So now I'm looking at all time frames, with looking at my daily bias, and a big strategy of mine is looking for gap fills. Basically when price opens, a dollar below the prior day's close, I'm playing that gap close
Mhm.
as one of my moves. And I had before things got a little bit messy when this all the war started and everything.
Right.
I
Mhm.
made, I think it was like 30,000 in like 25 days just doing that every single day. No more than like $1,300 a day, but I would hit that, close it up, move on with my day, and I was done by about 9:37 every day. And you know
Uh-huh.
that was great at the time, but of
Great.
course things change. So I had to change a little bit. But I do. I'm so big on keeping things as simple as I possibly can, and I'm just looking for my support and resistance along with structure and a trend line.
Got it. And thank you so much for taking the time to really explain a bit about your strategy as well. And so you mentioned like during the Iran war, right? When it started.
Mhm.
So most of like you were shorting at that time.
Yeah, long and short.
Most of the time because markets were like really
Yep.
just hitting hard. Every other day it's gap down or just things were breaking. At least like I think 1.5, 2 weeks, it was just crazy. Every day the markets were coming down only, and it's very interesting. I mean, like you are just focusing on a couple of symbols,
Mhm.
right? So that's really really great because you kind of really get, and I really believe into this. I think there is a personality to all of these symbols, right? Generally, when you see Intel and if there is an opportunity to go long, like based on our structure, Intel most of the time, if the structure is right, if the order flow is right, and if the areas are right, it's very rare that you get a losing trade in Intel. I don't know. Maybe it's with our strategy. That's Intel is always great when it comes, for going long.
Right.
It just works,
Right.
and it's very interesting. But it's like you have a combination. So you are looking at the
I am.
indexes as well,
Yep.
and then a couple of let's say the stocks as well. So you have a combination there, and it's really really cool. And you just mentioned because like so you were doing well, and then of course the market structure changed.
Mhm.
It's like the trends changed, of course, and volatility changed. There was a bit of, I think, around 10th of the month of the last month, 10th or 15th of the month, I think it was bottoming out already,
Right.
and then started doing a bit of consolidation, and then trends turned around and everything started skyrocketing.
Right.
So yeah, I mean, and so just a question from there, because I think it's very important for traders to understand, which is change in the volatility and the structure,
Mhm.
and hoping that what you are doing at the moment, until unless like you are not experienced like 5, 7, 10 years into it, and you see something working for a couple of weeks or even a couple of months as well, and just you start to get confidence
Right.
that hey, this is working, it's going to continue working
Right.
forever without making adjustments. But it doesn't work that way, of course. You and I, we are pretty much aware about this. So what kind of changes do you make in general during these periods of change, or maybe like couple of things that in your understanding you see, okay, these are the things that are going to change,
Mhm.
and possibly these are kind of adjustments that I have to make. So yeah.
Yeah, sure. Yeah, and I would say a big thing with that is, you can see the change typically on the higher time frames. Even up to the weekly. I mean, even sometimes I'm trading on the 5 minute candles. I know what's going on in the weekly and the daily. And the
Mhm.
we've been in such a when I do some look at the history of the markets. I mean, we're in uncharted territory. I feel like the moves up that we have experienced. I mean, it just doesn't really happen that often. I mean, what was it whenever Trump had announced the tariffs. This is kind of interesting
Right.
from a technical analysis standpoint, but we're up 70% since then in
It's
a
crazy,
little over a
yeah.
year.
Mhm.
And just a quick plug on that. You know, that was a good example. I tell my friends when it comes to the charting stuff, because some people think the technical analysis is like voodoo, but that is the bulk of what I do. But I mean, whenever he announced the tariffs, I mean, people were just like, "Oh my God, this is going to be the big drop we've been waiting for," and like he's ruining the
Yep.
market. Like, what is he doing? And if you look at the Nasdaq, it came down, and if you look and see where it bounced on like the weekly time frame, it bounced right at the 2022 highs. And if you bought right there, you'd
Right.
be up 70%. So, I mean, that was just former resistance turned new support. It's like people. I'm again. I'll mention this a couple different times because, like, for me, being by myself and everything, I'm just all about simplicity. But a big thing I always tell myself is that, there's a lot of life principles when it comes to trading. A big one where it's like,
Mhm.
don't listen to what people say, watch what they do. Where the news is what people are saying, the chart is literally a record of what people are doing. So, like, I just want to look at the chart. I want to
Yep.
follow
Mhm.
the visual that is in front of me, and I know that is the Bible. And that is it doesn't matter what Trump says. If there's a demand zone right there, something's probably going to come out in the news. The chart's probably going to front run it, and that is his place to buy.
Right.
I've seen it happen so many times. So yeah, that's where I like to know what's going on and be aware. But I know I'd probably need to throw out 98% of what I hear and just focus on what I'm seeing in front of me.
So true. And I think I'll agree 100% with you on that. If the structure is there, if the areas are there, doesn't matter what the news is saying, right? And if you have kind of like your understanding right, and you have done the research and the data,
Hmm.
and we'll come to the data in a minute here, but market will do whatever it is planning to do, regardless of what is publicly available. Let's say that, whatever publicly is available, or the analysts are talking about, doesn't matter. In fact, in my experience, I'll say that I have seen the opposite couple of, like, load of the times, where something will get downgraded or upgraded. It will still go there in a couple of days, but it's going to take out a lot of stores, right?
Right.
First,
Right.
it's going to do its job first before actually moving into this direction. And so that now that information is very general. It just doesn't help from in the day-to-day
Right.
operations and the day-to-day trading business. So I think those are really, really great points. So kind of understood like your approach. And so generally you are starting your day, and can we get a bit into kind of like a couple of habits and routines in the
Mhm.
morning before the open? Are you like, you have a specific structure set of rules that you are looking at before entering into the market, and kind of for how much time in general you are trading during the day before you call it off? So yeah,
Yeah.
a bit about kind of your starting of the day.
That actually changed for me a little bit recently because I was working in healthcare staffing and had my role eliminated in January. So when I was
Mm,
working, so I've been trading just in the meantime while I'm looking for my next venture. But when I was working my position, I was just trading in the morning. So I'd be getting ready, looking at what's going on in the pre-market, and what I was often doing because I was doing a lot of the gap fill strategy. I'd be entering, maybe around 9 o'clock, 9:15, um, heading to work. So you're gonna laugh. I do not recommend this to people, but I was trading on my phone. I did not trade on my computer probably for 6 months. Still making thousands of
mm.
dollars
Yes.
um, because I I have it set up where it's trading view linked with my trade station. So
Mhm.
so easy to go and enter, drag my
Yep.
brackets, very user friendly. But I knew what I was looking for, and I was comfortable with my strategy. So even though I didn't have the several monitors in front of me and everything, I still was able to take advantage of these moves because again, it was just you don't when you know what you're looking for, you don't need a whole lot. So I was yeah, when I was getting ready, looking at my support and resistance, looking where price closed the day prior, and I'd figure out my entry from there. But it's a little bizarre. I've probably put my 10,000 hours in of staring at a chart, so it has become very second nature to me already. So I get excited thinking about I'm 38 right now, but 5 years from now, 10 years from now, like what do I get to be in this world at that point? With what I've spent so far. So, and that's why I recommend this to people. I'm like, it's the barrier to entry, of course, to trading is so low. So,
Yeah,
why
yeah.
not dip the toe in and start to understand it? And so many people's money's tied to it. Like, if you don't trade, maybe you can just start charting so you can understand what's happening to your 401k when it's going up and down. That would just give me a little bit of relief to know, like, okay, like a pullback is normal. If it does
Mhm.
drop 50%, like here's why it's a good place to buy here. You know, Hopefully that doesn't happen too soon, but the way the market's going, it's like might as well just assume we're going up until further notice. But
Uh-huh.
that's why with charting, it is just such an interesting thing to me. Watching things hit to the penny. I mean, you seem like you can predict the future, but it's all there in front of you. And yeah, sorry
Great.
to go. Sorry, I want to tangent there, but to go back to your question about morning prep, I do journal a lot. Mindfulness is the name of the game with this. Um, you know,
Hmm.
I so I'm big on that. No strategy will ever be good enough to trump if you're in an emotionally compromised state. And I'm got some unfortunate experience last year. I had at the time a 4-year-old and a 1-year-old daughter. My dad passed away. With all that came just me having to try to sell his house and handle his estate. Some marriage struggles amongst all this, the stress of that, then losing my job, and I've got to realize, like, it doesn't matter how much I know about trading. When you have that much going on and that many different stressors, you cannot make emotionally neutral decisions. So, I'd encourage anybody, if they're kind of going through tough times, like, put this aside for a minute. Um,
Yeah,
you know,
yeah.
if when you're having a bad day, take a couple days off. Like a mental reset with trading it does wonders for you. And it's kind of interesting with it too, because it's just clicking buttons. You can have days where you're clicking buttons to make yourself feel better. Because we feel better by action, but unfortunately with trading, I would say the best action you can take is do nothing. Half the time it's a less is more endeavor. So it was a big learning situation for me. Lost some money, but kind of understanding when you're going through the tough times, like how you have to think about this a little bit differently and set it aside. Frankly, if you know, that much going on.
Right, Ryan. I think those are really, really solid points. I think, I feel like that I'm sitting on the other side with you. Like when you are saying all of it, everything is just so true here. I think, and of course, you mentioned at the starting of this call here that, you have been trading your own
Hmm.
capital, right? Yeah, so you have to deal with the actual stuff here. Now it's not a probe trading account or anything, and everything has to be there in order for it to work. And you mentioned about really the psychology part and the really the management of the emotions. And when you are not kind of like when we are not thinking clearly, it's better to just step away and just come back in a day or two, 3 days. It doesn't matter because at the end of the day, not doing anything or not doing anything wrong, it's also saving the capital.
Yes.
And that is equally important.
Right.
Growing profits or saving capital, those things are equally important as well. So
It's
really, really solid points there.
thank you. It's that's what people have to realize. Like, you have to treat this like a job. It is not a job. If you have a bad day, it's not like you don't make progress. You go backwards. Like, you can go backwards very, very quickly in this. And kind of at that same point, outside of kind of the more heightened situation kind of I went through, but in some of my friends who trying to learn it, I've been talking to a couple different people and just kind of helping them understand how to ramp up. Yeah, another kind of nice, simple concept, kind of principle of trading, I think, is the amount of money you use is equal to the amount of emotions you will have. So, so many people go in and
Mhm.
they want to make their $1,000 a day, but if you've only ever made $100 a day, you're just not ready. And
Yeah, yeah.
when you're trying to
Mhm.
find that consistency, so when it comes to psychology, there's steps to this. I mean, even if you have $100,000 sitting in the bank, it doesn't mean you're okay losing 2,000 and that only being 2% of what you have. Like, that is still going to hit. So that's where I'm like, you need to learn to make and lose 100 before you learn to make and lose 500, 1,000, 10,000. And that's where if you are starting to experience those emotions because maybe you have some other things going on, that's another tried and true thing I've done is I just simply scale back how much I'm using until I get my confidence back up. But yeah, it's a very interesting how you see a great opportunity show up and you're like, oh my god, this is a juicy one, like this is an A plus plus setup. You want to increase your capital, but I mean, if you're thinking you might make $10,000 on this one, you probably need to be okay with it going $3,000 against you, unless you have an excellent
Mhm.
risk reward ratio. But I'm not one to like try to find a 10 to 1 risk reward. Like I know maybe a 1.5 to 1, maybe a 2 to 1 is probably like more reasonable because
Yeah, yeah.
anything could
Mhm.
happen, right? Like, oh, it takes is one big trader out there and your support's not going to hold. So if you're truly owning the fact that you do not know what's going to happen next, then you need to prepare for the downside. And if you're trying to hit that home run, it might go against you a little bit. If you're not prepared for it, you're going to sell early, and then it's going to go your direction, and then you're going to do all kind of crazy stuff that's going to mess you up. The FOMO, the missed opportunity. So
I think again, really, really great areas. And you mentioned about the risk reward. I think in general, I mean, like those big opportunities, they are not there every day. A couple of them can come in a month, but on a daily basis, maybe 1 to 1.5 to maybe 3x. That's the kind of average in most of these opportunities because they are daily ranges, for these stocks. And they're not going to move, let's say 15, 20% in a day if there is not some kind of announcement or earnings or some kind of
some
news.
trend.
Right. And at the same time, position sizing, I think equally important. Doesn't matter, how you are, let's say, having your trade structured. If the position sizing is not right, it's going to put pressure on you. The moment it's not going, the right way, it's going to put pressure. So taking care of the position sizing as well, I think that's important. You already mentioned about the risk reward, generate 2x, 3x. So I think that's great. Just curious about your consistency percentages. In general, I mean, you have been trading for a couple of years now. Let's take a look at like last 6 months or maybe 12 months to look at kind of more of a broader data, maybe 6, I'll say. What kind of like consistency generally do you see in your setups or in your trading? Because that will also help new traders to really manage their expectations that it's not going to be
Right.
100% right every single time. That's just not happen. No matter you can bring in the best of the best strategy in the world, it's not going to happen. But what do you see on the consistency percentages?
Um, so with my morning gap strategy, the best I ever did for that streak was about 85%, which that is not normal, but that was, I was ecstatic about it. But, I would say mainly I'm
Mm,
in the like low 60s would be more kind of where I sit. And, last year, because I was kind of in like that little bit emotionally compromised, like I was winning 10 and 11 days in a row, but then lose 4 days of gains in one, emotional session.
mm,
So, that my daily win percentage is actually pretty nice because I'm taking, sometimes 8 and 10 trades because I'm doing some scalping. I'm doing a morning strategy, a couple different things. But if you're in the 60s, you're near world class in this. That's what people don't realize is
yep.
it's
Agree with that.
it's not about winning all the time. It's about controlling your losses, and that's you'll see that all the time. It's not how much you make when you win. It's about how much you lose when you lose. That's what.
And yeah, and how you lose it also, like, how it is impacting and how the expectations are managed. I think that's another important area. And just really understanding. And, it has a lot to do with time that you are operating in the market. Way more difficult to manage the losing streaks. 4 or 5 years in, a little bit more better.
Right.
10 years in, it's just the business. It's the and that's how I generally like, I look at it, Ryan. It's just a business expense.
Yep.
If you look at the trading business, and it is a business in my understanding, but if you look at it, there are no other expenses beside maybe your brokerage going out, bit of your, the tools that you are using, no other expenses. And those small losing trades, those are just the business
Yeah.
expenses. And when you have seen it working for a long period of time, I think, and you have a really clear strategy and the system working well, you want to be like a freaking robot and just do the
Right.
execution to the best. right? I think that's where really the difference. And of course, like I follow a lot of these guys out there, and people that I actually follow is SMB Capital,
Yeah.
and you are aware about the guys already. And I think great resource for new traders to learn, and one of the best out there. And I think one of the things that I appreciate about these guys is they treat trading as the business,
Right.
nothing more, nothing less, right? And you want to stay into your game and you want to execute to the best. So I think really, really great insights there as well, and I appreciate them, and it's a great conversation.
Yeah, it's like I love it. I
Let's
love just real quick the business expense concept. That's like something I try to tell myself. Is like, how much am I willing to pay to see if this support line holds? That's what it ends up turning into. It's like, how much am I willing to pay? What is my confidence level here? But it's that's where it is such a shift like partway through trading where it's why so many people say like you are a risk manager first and you are a trader second. Like that is what this
thousand
game is
percent.
like because
Mm-hmm.
unfortunately it's too easy to think you know what's going to happen next and you just don't. It's just like so if you don't know what's going to happen next then
Every single trade
you're just going to hurt
doesn't
yourself.
matter, right?
Right.
Mhm.
Right. That was great.
So, I mean, you are 4+ years into trading, and it will be very interesting to get your advice on a couple of, the newcomers there. And of course, I think you are aware because you have been trading intraday. I think you are aware about this news already that's coming out, the PDT rule.
Yeah.
It's going away by early next month. I think it's gonna attract a lot of new traders
Absolutely.
moving forward. No restrictions on the, I think $25,000 will come down to 2,000 bare minimum number of trades. The settlement will be fast. You can take as many trades as you want. It's a blessing, honestly, for us as traders. I think it's gonna bring in a lot of volume as well.
Absolutely.
I feel that the volumes are gonna change. What are your thoughts about that? About this new rule? I think it has been there for years.
Right.
It's going away. What are your thoughts about that?
I'm excited for people. I know some friends of mine will probably start to participate because they can now and it's funny people know so little about trading. We really have the conversation that they think that if I'm trading with $100,000 that I have $100,000 on the line on every trade. I'm like
Mhm.
that's not. I'm not gambling that
Yeah,
money.
yeah,
I'm trying to make 1% of that on that money. But at least people can come in a bit more comfortable and the 25,000 thing like the whole I guess if you have 25,000 you're smart enough to trade like ridiculous like hey let
yeah.
democracy. Let people in. Let people give this a whirl. But I mean, the best advice, we it'd be interesting to see if enough people come in with even those smaller dollar amounts to start to cause any shift in how we see things play out and volatility and whatnot. But I would definitely encourage people, go in even with your $2,000, trying to make your simple 1% per day. You make 1% a day, and you are an absolute stud. Like people just don't
Mhm.
realize that it's the compounding effect, of course, right? Like that works in every state of our life. But if you can make your $20, it doesn't maybe sound like a lot, but heck, that's lunch. It's much fewer things now than it was in the even a couple of years ago. I guess $20 can get you, but I mean, you're in this game to learn it and to grow that incrementally. And I would actually encourage people to maybe check out some things like leverage ETFs because that's what I
Mhm.
started with as well when I was just learning is like the like Nasdaq 100. What's nice about it is there's so much volume in there that you're not going to see that drop 20% in a day. Where any stock that could happen. So the Nasdaq it's a bit safer. It's a bit more controlled in its moves, and then the TQQQ and the SQQQ will give you that maybe 2 to 4% move in a day that you really want, and why people might trade a stock. But basically the control of the ETF, but with the move of a normal stock. So maybe just a good place for people to look for day trading. And just a plug on the obviously the leverage ETFs. You don't want to hold those, of course, because there's some decay that happens with how those are calculated. But that's just kind of a big good thing to people for people to look at if you don't want to be researching a lot of stocks.
Mhm.
One more thing on that too. I always tell people like, with trading, it's if you're going to dabble in it, maybe just don't do it because it's probably one of those things where you need to be keeping an eye on it pretty much all the time, or it's just not even worth your time.
Long amount of time learning and a lot of hours in, and it's one of those things where the initial perception is the get rich quick,
Mhm.
and it turns out to be the opposite of it, totally opposite of it. But I think, as like we have started doing content and the podcast and really just, I think the success is there, but it will require a lot of time, energy, 3 to 5 years. And that can be like my personal opinion, 3 to 5 years, forget about really making any kind of significant money. And if you just really focus on collecting the data,
Right.
the research, your screenshots, maybe whatever that one particular setup or condition that you're trying to trade, maybe have like 500, 200, 300, 500 screenshots around it.
Right.
Put them in one place and just visit every single time to see what is working, what is not, and what is not working. Just take those out and focus on what's working and just optimize it to its best, where it's like at the peak. And as you mentioned about the consistency, if you can just hit 60%, 65%, I think 50 plus, I think even that should also do a good job. Although that will require a better emotional management with the lower percentages, but it's still possible. But lot of perseverance and sticking to it. It's difficult. I mean, trading is really difficult.
It is.
You were just mentioning at the starting of this conversation, which is, hey, in this business, you are not sitting at break even. If you have done something wrong, this is the only job in this world where you're gonna lose out of your account,
Yes.
right?
Yes.
That is the most difficult part to handle, but it is a great journey,
It
Brian.
is. It's,
I just want to share this. It is a great journey, and it's the game of staying in. Just
survival.
don't take no for an answer.
Survival.
Go don't take no for an answer. Build out your data and research until unless the success is not coming. Have some other source of
Yeah.
income.
100%.
Those initial couple of years, because that will kind of give room for your proper research to play out, and that is good place to be in. I think I'll agree with a lot of areas that you mentioned there.
Right.
And I think we can go ahead and wrap it up for the day. We have a lot more to discuss, but it's already a great conversation and a lot of energy. If, let's say, if just a new trader out there, if they are having a quick question, they want to get a bit of guidance,
Mhm.
because I think you are a good candidate. Everything that you just shared, it's real. It's real stuff. So really appreciate that. If they want to reach out, where they can find you, maybe on LinkedIn. Are you on Instagram also in general?
I'm on Instagram. I am planning to get a couple workshops set up because I've had just a lot of friends ask to do stuff, and um,
Mhm.
over the
Great.
course of the next couple months, I'm planning to put together a course as well. Of I'm not a master trader here. I'm just somebody who's experienced 4 years of the pain, the excitement, the euphoria.
Mhm.
So, I am putting a couple things together of, like I mentioned, it's everything I do is I want to take the complex and make it as simple as possible for people. So that's the name of the game for me, and it's going to be called Hawk Traders. Um, People always pronounce my last name wrong. It's Hawk, but this going to be Hawk Traders. Um, so that's where I'm at, and part of that too. Even when I started this, I knew I wanted to do it forever, and I knew like it's gonna be great when I can get to the point of making $10,000 a day, but the fulfillment is going to come from passing this along to other people because, like we mentioned, it's a low barrier to entry. The $2,000 PDT
Mhm.
rule is going to drive more people in, and also it's just something that you know there's only so many things that you can do when you're 80 years old sitting at home, and click a button sure as heck is one of them. So why not get into an endeavor where you can do this forever? So those first couple years, survive, like you said, build your pattern recognition, figure out
Yep.
you know figure out what your ATM's machine is going to be, as in like what is the pattern you're looking for day to day, and that's it right there. And it's just doing it over and over again. It is just finding what you want to do and doing it consistently, and that's the whole thing.
Great, Ryan. And I hope when you come out, let's say with your education material, I think it's going to be great, and we can always stay in touch. I think
Absolutely.
a lot of great content to do here and a lot of great insights and takeaways from this conversation as well. I'm wishing you a lot of luck and a lot of hard work and a lot of learnings and a lot of success in your trading. And that's going to come anyways, even, it's a part of the game. It comes at the moment as a warrior, you enter into this. It's a part of the game. It's a part of this battle. So, but really appreciate your time. It's great connecting with you today.
You as well. Thank you so much for having me. I really appreciate it.
All right, everyone, that's going to be wrap up for today's episode of the Trading Map podcast. Before we close things out, I want to give a quick shout out to the sponsor of today's episode, Bull Street Edge. Bull Street Edge is a trading technology company designed for traders who want a more structured and data driven approach to the markets. Their platform includes tools like Trading Journal, AI Trading Coach, charting tools, research watch lists, and access to a growing community of traders. If you are serious about improving your execution, discipline, and overall trading process, definitely check them out. I will also leave their link in the show notes below. If you got value from today's discussion, make sure to subscribe, leave a like, and share the episode with other traders who are working on their craft and trying to improve consistently. Appreciate you for tuning in, and I'll catch you in the next episode. Until then, stay disciplined and be great.